Hi there, good afternoon. You tuned into ET now, and this is Market Fatatfat, and this is a show where we get you all the stocks that are buzzing based on news flow as well as on technicals. And talking about technicals, now we have Dhwani Patel joining us on the show. Very good afternoon to you, Dhwani. Thank you so much for joining us on ET now. And let me come first to you and talk about capital goods stock, that's Thermax. Where do you see this one headed from here on? Do you think that the rally that the entire capital space, power space had witnessed is now fizzling off, or do you expect a reignition of that up move?
When you're talking about Thermax has still got some more fuel left into the fire. It's given a breakout, in fact, on a daily chart above the previous swing highs, and the stock is expected to move from here to 2560 levels. Ideal stop loss over here that comes down is 2350. So one can go definitely long on this particular one from the current levels.
Okay, let's move on and talk about Pharma. Harsh, why is this one in focus today?
Well, yes, a couple of reasons why. What the company has announced is that they've suggested that there has been a successful closure of inspection, and they've received an EIR, which is an establishment inspection report from the US FDA for its drug formulations manufacturing facility at Visakhapatnam in Andhra Pradesh. They've also suggested that they've received a final approval with regard to an abbreviated new drug application, which is an ANDA approval with regard to tipiracil hydrochloride as well as trifluridine tablets, which has a rough market of around $211 million as of December of 2022. So on the back of those couple of reasons, the stock is in news, of course, but stock is slightly lower in trade.
All right, so that's the take coming in on Pharma, and why that one is in focus in today's trading session. Let's shift focus. Let's talk about Info Edge. That particular counter, last time I checked, was trading higher by 2.8% or so, which took the stock to the highest level in nearly 9 months since August 2022. Kotak Institutional Equities has retained their ad stance on the company and raised the target price to 4,950 rupees per share from 4,700 rupees per share. They're saying that while IT hiring has slowed considerably in FY24 so far, non-IT hiring, which comprises nearly 50% of Naukri's revenue, remains steady. They're also saying they remain positive on Info Edge due to the market dominance in recruitment segment and improving revenue momentum in other businesses, including 99 Acres as well as Siksha. So on back of backing coming in from Kotak Institutional with an ad rating and also with the target raised to about 4,950 rupees per share, you can see Info Edge on your screen, trading higher by about 2%.
Absolutely, trading higher by about 2%. But putting the spotlight on Suven Pharma, and when you look at it, Dhwani, what are the charts indicating for this one? Today trading with gains of almost 1%. In the last 1 week and last 1 month, overall when you look at the traction, it has been a bit subdued. You know, it has given some mild returns, but not as much as a rally. Finally, time that we could see rally coming in for Suven Pharma.
Yes, absolutely. The reason why it comes on a technical radar right now is that the range that it had been forming in the past few trading sessions that we are constantly seeing on this one has given a breakout in today's session. We are seeing a green formation over here, and the stock is expected to give a positive upward momentum from the current levels. We can see a short-term target of 500, and the target extends also up to 520, giving us a stop loss at 475, which makes it also a very favorable risk-reward trade.
Okay, favorable risk-reward trade is what Suven Pharma is at. Keep an eye out on those levels. Let's move on and shift focus on the banks. Now, Morgan Stanley has come out with a notes on banks where they're saying that Indian banks' margins have peaked, but what they are expecting in terms of that over there is that they expect the group to continue to do well. Valuations at the mean level imply that strong compounding should drive strong returns for the banks, as well as expecting re-rating to above the mean levels as visibility comes in on the CAPEX cycle, improves further over the next year as well. Other than that, private banks better placed than the SOE banks and better growth and operating leverage relatively to the SOE banks. So they do prefer private banks over the other banks, while obviously there is a shifted preference that they're seeing towards the wholesale funded banks as well, which they have taken the pain to hire the cost up from as well. So yes, they're positive on the banks, especially they prefer all the private banks. You're seeing the private banks names like HDFC Bank, ICICI Bank, Axis Bank are now trading with mild bit of a gains coming in. Cheryl. So yes, keeping an eye out on the banks. Morgan Stanley is coming with a note on that.
All right, that is on the banks. Let's put the spotlight on the defense pack. Remember, the entire defense pack is a buzz. You have that trip by the Prime Minister to the United States. We're expecting a lot of defense deals to be signed. But today, why Paris defense is in focus, it has actually risen excess of about 4%, and it is the biggest intraday gain coming in for the counter in about 2 weeks or so. The company won a contract for realization of optronics periscopes from Instrument Research and Development Establishment of Government of India, and the order that they've won is worth about 53 crore rupees. So on back of that order win, as you can see on your screen, Paris Defense holding on to good gains, about 4.7% as we speak.
Okay, that is Paris Defense for you all. Moving on to the next one, and okay, we'll actually go across and listen into what Atul Suri of Marathon Trends had to say in terms of where has he been investing, and it has been seems like in the capital goods and engineering names is what he believes in, and he also believes that there are sectors that have been underperformers in the past could see a good growth potential going forward as well. Let's go across and listen in.
And I think in India, what really happens and where we are heavily overweight, overinvested, are places like your basic capital goods, infra, construction, defense. These are sectors which have not performed for a decade, right? They were dead. Nobody looked at them. So the beauty is that they are underowned, they are undercovered, and they are ignored. And they still, as you asked me, you're still looking at another set of stocks. But the set of stocks that are driving the market is new. And that is the nature of the market. The nature of the market is to sidestep you. It will always be a place where the majority will not make money, or where the majority opinion is stock somewhere else will move. So I think that this is something that we've experienced last year. This is a very big shift we made in our portfolio. It was very painful. You know, the names that you mentioned, we sold last year, and we got into a lot of these engineering, infra, defense plays. And you'll realize that, hey, you know what? Here the bull market is something else.
All right, so that's the word coming in from Atul Suri. You can catch that entire interview on ET now through the course of the day. But Dhwani, coming to you, Make Money Fine Chem, why is this one in focus?
The very important reason technically why this one comes into the focus is volumes. The price move that we are seeing over here is also backed by good amount of volumes in this particular counter. What we are seeing on a weekly chart is also that it's trailing above its 50 period and 200 period exponential moving averages, giving it a more upper thrust over here. We are also looking at a very good target over here at 1390. The stop loss over here comes at 1085.
Let's keep an eye out on Make Money Fine Chem and those levels over there. Torrent, okay, actually before Torrent Pharma to Harsh, we'll go to Lisa for BHEL. And why is this one in focus?
Well, we need few reasons for why this stock is in focus today. Firstly, the BHEL and Titagarh consortium, they have signed a contract to manufacture Vande Bharat trains, and it is a big order of around 24,000 crore. This is for 80 trains over a period of 6 years. And it is the first time that the Indian Railway has awarded a contract of this value to a consortium. This also entails a maintenance of around 35 years. Another reason is that BHEL has signed an MOU with Volvo Eicher Commercial Vehicles, and this is for taking up a joint project for development and deployment of Type 4 cylinders, that is both hydrogen as well as CNG in commercial vehicle segment. So as we can see, the stock is ticking up 1.5% in trade, outperforming the benchmark indices.
All right, that's BHEL for you. And Harsh, are you planning to take a switch from tracking banking sector and take over the pharma sector? Because another pharma stock that you're going to talk about, that's Torrent Pharma.
Well, yes, absolutely. So Torrent Pharma in the news, very similar. We are seeing good traction with regard to the approvals that some of the pharma names are getting from the US FDA, and that's what's happening with Torrent as well. Establishment inspection report has come through for a pre-approval inspection which the US FDA was conducting, which the company had announced back in March. That approval has now come through, and that means that the manufacturing facility, which is in Bileshwarpur, Gujarat, gets, and the inspection is now complete, and therefore the inspection has been successfully closed. On the back of that, you can see positivity coming on the stock as well. In fact, it was up over 1.5% in early trade before, being around 0.5% higher as we speak.
Okay, let's move on and then talk about data patterns. And Dhwani, why is this one on your list? What is making it look attractive on the charts?
This is a very interesting stock over here. We have seen it giving a very beautiful return over the past 1.5 years. It's gone from like 580 levels, trading right now at 1880 levels. These are the kind of gains this particular stock has in its own capacity to give. What we are seeing over here is in the past few days also the stock has given returns from 1600 levels to 1880, and it's giving a fresh breakout right now. That's making it more interesting. One can enter into this particular stock. Those who have got the fear of missing out in this one, it's the right time for them to get into this one. We are looking up at gains of almost 15% coming in from this particular level, where 2160 is the next target. The stop loss over here for this one comes at 1780 level.
Okay, keep an eye out on that level for data patterns. But moving on, we have Kalyan Jewellers. This one is in focus. We saw a big block deal that happened today, and a couple of block deals on Kalyan Jewellers. This was a large block deal, trade of around 6.2% equity stake or 6.4 crore shares change of hands in the block deal via 6 block deals. That was. Now, obviously, we do not know the names of the buyers and the sellers as of now, but the stock has jumped as much as 12% intraday today. As of now, also holding on to those gains of 12%. So surely will be interesting to see who is the buyer and the seller of these block deals. 6.2% change of equity hands. So keep an eye out on this one.
All right, that's Kalyan Jewellers for you. But Muthoot Finance, how are the charts for this one looking like, Dhwani? And do you see further scope of up move in this gold finance here?
Further up move over here. What we are seeing over here on a daily chart, which is very interesting, is that the ADX, which is the directional moving index, is moving above 35 level. RSI is also giving us a positive crossover on a shorter time frame. So from current levels, one can go long into this one. The target over here extends at 1300 level. The stop loss over here comes at 1165.
All right, moving on, let's talk about Ashok Leyland, and this particular counter is in focus. It's rising about 5% last time I checked because of its investor presentation it has had, and it forecasts strong demand for the medium and heavy trucks in FY24. And post that, if you can see, the stock is gaining more since February 2nd on back of that particular development, and it's gaining for a 5th consecutive session. You have a lot of brokerages post the investor presentation of Ashok Leyland come out with their take. One of them saying that they believe that MHCV upcycle is near the peak and they expect the growth to be depressed post FY25. That's Elara Capital, but they're maintaining an accumulative stance on Ashok Leyland with a target of 175 rupees per share. If you look at the entire brokerage scenario, the stock already has 39 buy ratings, while 5 are on hold and only 3 are on sell. But the fact that the company is giving a very strong truck demand expectations for this financial year, 5% up move coming in on Ashok Leyland.
Okay, let's move on to the next one. And Dhwani, put the spotlight on ICICI Prudential Life. What is making it look so attractive, and would you still say it's a buy at the current price?
Yes, absolutely. Today, in fact, we have also seen an uptrend coming in HDFC Life, SBI Life, and ICICI Pru Life also. What makes it more attractive and my inclination towards the ICICI Pru Life counter is that it's given a fresh breakout from previous swing highs. And what we are seeing on weeklies also, it's continuing its strong upward trend over here. So we've got a weekly breakout as well as coming in on this one. The target over here stands at 610 level, giving a stop loss which is very short over here at 520.
All right, moving on then, Lisa, let's talk about Piramal Pharma and why is this one buzzing in trade?
Well, yes, the counter is bought on the expectation that it will be included in the FTSE index, rebalancing later in the day. And Nuvama is expecting around $12 million counter inflows in the stock. And another reason is that Jefferies has come out with a report on the stock, and they say that the CDMO outlook, that looks very strong, and it can be a turnaround for the company because the company is signing new chemical entities, and this will give further confidence on the CDMO turnaround. Also, the good order book that is a good start for the company for FY24, but the seasonality, that is a key to watch out for, and new employees, that is expected to improve execution, and several sites, the new capacity has also begun. So on back of this, Jefferies has given a buy on the stock at a target price of 115, and that's why we can see the stock is up around 5%, clearly outperforming the benchmark indices.
Moving on to stock number 36 for today, and that is PTC India. Dhwani, this one has given 50% returns approximately in the last 1 year. At the current price of 107, would you still give it a thumbs up? Should we still expect an up move?
When we are looking up at this particular one, it is definitely a buy at this level. What we are seeing chartically also is that on weeklies we are getting an RSI crossover, which is very important. That multi-time frame analysis also, when we are doing on these particular stocks, we are giving strong bullish moves coming in on this one. And in the last rally also that is coming in on the index, we are seeing mid cap and small cap stocks taking up a pick over here. So this one also interests me technically. The chart looks very interesting over here. What we are looking up at a level of 116 as the next target, and a stop loss over here comes at 103.
All right, so that's the take coming in on PTC, but India could become a net exporter of energy someday. That's the word coming in from Manish Chakania of Inam Group. He believes that India Inc. is going to power ahead in terms of renewables. Listen in.
India is the worst affected country in an energy crisis historically. And now when energy prices, well, it's not imminent, it won't be in 2-3 years, but say you're talking 2030, imagine what it does to your balance of payments, because that 6% import bill hopefully vanishes if you're creating your solar and hydrogen locally. And maybe, like I said, from an importer, you become a net exporter of energy, because solar, literally 1 hour is equal to all of mankind's needs. And the problem was on storage technologies. And even in storage, if you start cracking this hydrogen thing, and today the cost curve is very high, but the stated goal of all the Reliances and others is to get it down to that $1 price point. It has transformational impact. So industry after industry, which you think is highly energy intensive and we can't participate over there. Just for example, and I'm not making the case, but let's say aluminium is considered to be highly energy intensive. Aluminium is...
All right, moving on then, let's talk about CEAT. And CEAT had an analyst meet, and there are some key highlights coming in from the management. They're saying that the replacement demand has remained flat in Q1 of FY24, but they're expecting a recovery in the next 2 to 3 quarters. They're saying international markets like SAARC, Middle East, Africa, as well as Europe have faced problems, but they're aiming to grow the exports revenue 2 times to about 4,000 crore rupees by FY26. They've said that they're looking to enter North American markets by launching products in the TBR and PV segments, and in the domestic market, the company continues on their premiumization trend. Also, they've said that the raw material basket is expected to inch up by 1 to 2% sequentially in Q1, but their capacity utilization currently at 70% for two-wheelers, 70% for PV, and 85% for CV. So that's the commentary coming in from CEAT management. But if you look at the stock price, it has a very wobbly day. It did see a sharp spike as well. I saw a sharp dip as well, but now it's trading flat with a positive bias.
Let's move on, and Harsh, Equitas Small Finance Bank is the next stock that I'm going to talk about. What is the reason for this?
Well, yes, now when we look at Equitas, last April we had PN Vasudevan, who's the MD CEO at Equitas, and has been MD CEO since the last 6+ years now. So what he suggested is he's planning to retire, and he's planning to move on from Equitas, leave Equitas and move on. And what that did was the stock really tanked. After that, the stock has gone up a very solid 126% in the last 1 year. Very, very solid returns given. And now we have PN Vasudevan, who's renewed, or rather the RBI has approved renewal of his tenure as MD CEO for another 3 years. So there's an extension being given by the RBI to Equitas Small Finance Bank MD CEO. He had decided to stay back earlier this year, and on the back of that, you can see positivity on the stock as well, more than 0.5% higher in trade today.
Alright, so that is Equitas Small Finance Bank, but let's take a look at what the markets are doing. Less than 100 points away from the record high levels when it comes to the benchmark. When it comes to Nifty, right now it's past 18,800 mark. The recovery from the day's lowest point is almost 0.5%. So as you can see, right now we are perched at the day's highest point for the Nifty. We've surpassed 18,800 mark, and we are just hardly less than 100 points away from that record high levels. Remember, the record high level for Nifty is at 18,888. So yes, just a few points away, Vinny.
Absolutely, just a few points away. Keeping an eye out on that one. But Dhwani, Suprajit is the stock that you picked out for us then. What is the target that one should keep for this one?
This particular counter interests me because we've got a volume breakout of the past 10 days over here. So volumes is what is backing the entire price action over here. The stock is taking an up move, and from current levels one can enter into this one. The target extends up at 422 levels, giving a stop loss at 390.
Okay, keep an eye out on those levels for Suprajit Engineering. Today, up 2% in trade. Moving on to Hero Motor. This one is in focus. Why? The Ministry of Corporate Affairs has ordered an investigation against two-wheeler maker Hero Motor Corp over an alleged corporate governance issue. The investigation is to assess Hero Motor Corp's relationship with the third-party vendors in a case related to the alleged diversion of funds. Hero Motor, however, said that it has not received any communication with this regard and will provide all the information sought by any regulatory authority. But that's the word coming in from Hero Motor as well. As of now, seeing a decline of around 3% in trade.
Alright, that's Hero Motor Corp for you. But Dhwani, if you look at the entire life insurance space, at least the private sector life insurance space, all of them are on fire, and one of them is definitely HDFC Life.
Absolutely. We initially just talked about ICICI Truly, and HDFC Life is one stock where I would like to keep it on my radar right now, because it's already given an up move that is expected of the same. The next breakout level on this one comes at 620. So it's a buy recommendation coming in above 620 with the stop loss at the bottom level of 585. The target over here extends at 660.
Alright. That is the take coming on HDFC Life. Let's shift focus. Let's talk about V-Mart Retail, because that one also had a management meet. And there's a key takeaway that's coming from DAM Capital. They're saying end of season sale preponed as the channel is carrying high inventory. They're saying that they've highlighted the impact of reshuffling of the market share gains as Future Group's portfolio of the stores gets revived. In less than 500 rupees price, seeing about 40 to 50% drop in the footfalls. In the range of about 500 to 1000 rupees price range, the footfall has dropped, but the ticket size has increased. The demand during the marriage season was below expectation. Q1 is expected to be moderately weak. They're also saying Q2 being seasonally weak is expected to be weak across the industry. So not that a great commentary coming in from V-Mart. You saw the stock actually take a knock at the open, but from there on is trying to gain back its mojo, but still trading flat with a positive bias.
Okay, let's move on and talk about Nykaa, because they had their analyst today, and we are seeing that the stock is looking quite perched up in trade and is trading with gains as of now. Key takeaways actually firstly from the presentation that they've uploaded on the BSE is that in terms of diversification is what we're seeing coming in, because beauty and personal care in FY19 contributed 98%, now it's contributing 68%. So obviously the fashion business, that's coming into play as well. In terms of the B2B business, the addressable market over there, the company highlighted is around $1 to $2 billion, which is 3 to 5% margin, EBITDA margin potential to scale up as well. For FMC, for the Nykaa fashion business, they said the premium fashion market is expected to grow at 3.5 times by 2030, while in terms of the beauty and personal care, also omni-channel is the way to retail beauty in India. Physical stores turn EBITDA profitable within 1 year of the launch as well. Overall, the company is targeting to maintain their growth ahead of the market, achieve better leverage in terms of operating costs and investment in terms of brand building as well. The company also has highlighted highlighted the opportunity and the market size that is there in total addressable market size. Discretionary consumption is starting to expect it to see a better growth going forward as well. And also the company said that, in terms of competition, they're not a bit too worried about that. The market is quite large in terms of that. They see a lot of potential, and the company has a lot of loyal customers, for premium customers as well. For fashion, they may require a bit more investment, but not too worried about competition, and that is why the stock is in focus.
All right, that's Nykaa for you. And what a comeback. Most of these new age tech stocks have actually staged Dhwani. But Nykaa, where do you see this one headed now?
When we're talking about Nykaa in particular, backing the fundamental topics that are already coming in, these are the news flows that we are seeing now. But the stock had already shown its reversal from 414 levels. The stock is moving upwards and also closed above its 50-period exponential moving average, which is also attracting more people coming in on this one and investing their money into it. The stock from current levels can go up at 168 levels, and the stop loss over here ideally should be put up at 132.
Okay, that was Nykaa on the charts as well and on the technical, so keep an eye out on those levels. But with that, viewers, we're absolutely out of time on this edition of Market Fatatfat. Thank you so much, Dhwani, Harsh, as well as Lisa for joining in with us, as well as Nagraj. And viewers, it's a goodbye from Sharon, myself, as well as the team who put this show together.